All right, welcome back, traders. John Caruso coming to you here, RJO Futures, October 13th. It is Friday. We're taking a look at the market right now. As you can see, I got a 30-minute chart up of the S&P 500, but let's first cover some of the market risks that we encountered coming into today. Clearly, still, situation over in Israel with Hamas, it's starting to reach a fever pitch. I still don't believe that situation has crested yet, so we are going into a very nervous weekend. And I think that's being reflected in risk assets right now. You've got gold prices up 2%. You got silver up nearly 3% here on the day. Oil prices are up 4.5%. And the stock market is lower. So that is the fear trade right now. Yields have come in since yesterday. I think we're down about 10 basis points in the 10-year note, or the 10-year yield, I should say. We did hear from Jamie Dimon this morning. He doubled down on Paul Tudor Jones' comments earlier this week, suggesting that we're now perhaps in the most dangerous time as far as geopolitics is concerned in perhaps the last several decades. The Ukraine and Israel may have far-reaching impacts. That is a direct quote from Jamie Dimon. We did hear from J.P. Morgan this morning on earnings. They did beat across the board. Wells Fargo beat across the board. BlackRock also beat across the board. But we did see at 9 o'clock a release of a weak University of Michigan Consumer Sentiment Report that came out. So that is a look at some of the market risk coming into the beginning of the day. The other thing I kind of wanted to mention, our baseline right now, we think in the bond, in the 10-year note is roughly around 4.5%. It's very interesting to watch what's going on. Of course, yesterday we had the hot CPI number. Bond yields, 10-year yields jumped up about 16, 17 basis points, up to about 471 or so. So it's very interesting because we are starting to hear kind of a softer tone come out of the Fed in terms of, perhaps a pause is likely. I happen to believe that the Fed is likely on pause right now. I don't expect another interest rate hike throughout the duration of the year. So as far as today, even despite the hotter than expected CPI data that we saw this morning. So pay very close attention right now. It's almost like, I don't know if I want to quite describe it as a checkmate situation as far as interest rates go and the market goes, in interest rates and how inflation goes. But we all know how it kind of works in chess. The king will move, the queen will counter, the king will move again, then the bishop counters, and this happens until the king is cornered and eventually captured, and it's checkmate. So, the Fed pauses. It seems like the Fed's on pause right now. Yields move down every time a Fed head speaks in terms of, portraying a dovish message. Yields come in. Then, of course, Hamas bombs in Israel. Flight to safety. Yields move down. Oil prices move up. Yields try to chase oil prices higher, and so on and so forth. So it's hard to kind of imagine how the stock market is going to get out of this unscathed. So right now I'm looking at the 30-minute. You're seeing it too, 43.61. We had the attempted rally in here. First, I'm going to jump over to the daily chart because I've been harping on this for a while. So we were expecting a rally in here. You can go ahead and check the minutes from some of our previous videos. We did get that rally. The last video we put out was earlier this week. We did recommend that you start resetting some of those bear side strategies in here. And so far, that has been the correct move. We'll see what holds up throughout the course of the day. Obviously, had a very strong reversal yesterday, had an attempted rally today. I'm going to jump back over to the 30-minute chart, where you can see the attempted rally in here. And then when we saw that big outside candle, I don't know if you can see it on the 30-minute, that was a sign that something was changing. We started hitting bids all the way down, and we're carrying a short position right now. I'm going to be quick to cover if we do start to see this try to reattempt a move back above 43.88, which is these old past peaks in here. But for the moment, we're going to ride this wave lower and see where it takes us going into the weekend. So that is kind of a look at the S&P. I'm going to go back over at the on the daily chart. As you can see, we had it drawn in here where we thought we'd see some upside chop, going to hit some resistance in here, and another move back to the downside. We are still expecting a choppy upside rally going out into the end of the year, but we remain in this period of risk, we think, between now and we'll say the first week of November. where we still think potentially there's more downside to come in the S&P. This was perhaps a strong enough low in here that maybe we don't break back through these lows at 42.30, but that remains to be seen. Obviously, the geopolitical situation is likely reaching a fever pitch, and we're going to see if we see more risk off going into the close and over the weekend, of course, going into next week. So that, of course, is a quick update on the S&P 500. Happy Friday to everybody out there. We'll catch you back here next time.